Morning, everyone. Thanks for joining us today. My name is Stephen Jenkins over here with Insurance Agency Marketing Services. Wanted to thank you for joining us on the call. And later, we'll have Ameritas on here to go over some new updates on our relationship with them as well as some products available. But before getting into that, I did want to take a couple of moments and chat about some additional ways IMS is here to add value to your business. So the first up, we've got our new producer builder. And as you can see there, we've got a few different point totals from 100,000 to 1 million. In your first 6 months with us, you automatically get enrolled to our new producer bonus program. You can see there's a variety of different options that you could cash out, whether that's marketing programs, marketing dollars, cash trips, etc. If you got any questions on this or would like to know a little bit more, just reach out to one of us sales directors here. That number is 800 255 5055. In addition to that, we do have our referred producer program. If you know of an agent who maybe isn't quite happy with their current IMO relationship, or maybe they just might be a better fit over here, send them our way. Not only will you get a bonus off them when they first get contracted, but then on an ongoing basis, you'll receive a bonus based off their paid production. You don't have to do anything here. We'll take care of all the service and support for that agent. This could be a great way to generate an additional revenue stream for you. In addition to that, we do have our standard marketing reimbursement programs. As you can see there, that's $100 for every qualifying 100,000 of index annuity premium. And then on the life insurance side, it's $200 for every 100,000 a single, and then 100,000 for every single premium. That's 200,000, and then 10K for life target. 200 for every 10K of life target. Again, if you'd like to know more about this, reach out to one of the sales directors. That number is 800 255 5055. Back office support, I'll touch on this for a moment here. It's been a cornerstone of IMS for the last 38 years, whether that's pre-sale, illustration, design work, or pre-underwriting. The whole submission to commission process, our team does an amazing job. So if you haven't tested us out just yet, I do encourage you to do so. We have a great team. Our IMS website is a wealth of information. We have our sales tools out there, our IMS portal. We've got our quoting software out there for annuities and life insurance, and we've also got the current rates. In addition to that, we have our e-app platforms, product information, and underwriting information. So with that, I do want to go ahead and launch our first poll question. It's, would you like a walkthrough of our IMS website? I'll get this launched out here. This is if you're wanting one of the sales directors to reach out to you, get a walkthrough of our IMS website, all the information out there, where to find things, where to find the quoting tools, where to find the applications, as well as the wealth of information out there with the resource in our sales resource library. Our sales resource library does have hundreds of pieces of points of sales pieces. You can instantly download just about any topic you can think of talking to a consumer about. Go ahead and close that poll question. Thanks for your participation here. And I do want to mention that our portal does integrate with all of the standard e-app platforms, so Firelight, iPipeline, as well as Sunfire on the Medicare side. If you're curious about what carriers do integrate, we do have a cheat sheet. So once again, reach out to one of us sales directors. We'd be more than happy to help you. That number is there on the screen, 800 255 5055. Our creative marketing team, and creative really is the key word here. They work on a variety of number of projects for agents all across the country in different phases of their career. They do an excellent job when it comes to taking the idea that you have into your head and bringing that into life. They also have a very big focus on brand, as branding has really evolved over the last few years, and it's really what you look at and how the marketplace has placed a great importance on your digital brand. We have more and more agents who are doing virtual sales and consumers who are doing more research online. So if you don't have a very robust digital brand in addition to your local market space, it can definitely impact your business. If you have any questions on our creative services or what our team can do, reach out to one of us sales directors here. We launched our RAA several years ago. We've seen significant growth in our wealth management. So I'm going to stop here, launch our second poll question, which is, would you like to know more about IAMS Wealth Management. So this is whether you've been thinking about adding AUM to your business or you have it now. Maybe you've got your 65 recently, or you aren't quite happy with your current RI relationship. Just check yes, and we'll have someone from the team reach out to chat with you a little bit more about the services that they can provide over here. I'll leave that poll question up for a little longer. All right, awesome. Next up, we have our Life and Annuity Academy. In fact, we just had a great group of advisors here a couple weeks ago. And unfortunately, I do believe that that was the last one of the year, but these events are an amazing opportunity for you to spend some time working on your business around other like-minded individuals. It's not easy to do that when we know you're out in the field, you're running the business, you're meeting with prospective clients, dealing with IMOs, carriers, etc. But these academies are really a great opportunity for you to just take some time and just work on your business. If you're wanting to look at the calendar and see when our next one is, reach out to one of us sales directors and we can see if we can uh, get you lined up with that for our 2024. Make sure we can highlight that on your calendars and take some time for that. Our Quebec trip qualification has been underway since the beginning of the year. Keep in mind that production between January 1 and June 30th of 2025. So we're kind of at the halfway point here where we'll count towards qualifying. If you'd like some additional information or where to see where you're at, your current standings, reach out to one of the sales directors. I believe that we had sent an email blast out with the standings. And lastly, I do want to make sure that you follow us on Facebook and LinkedIn. We do syndicate a lot of our content out there. So whether it's on product changes, marketing ideas, on what's going on in the industry, this is probably one of the best ways to keep up to date with us. So with that, I'm going to get it over to our presenter. On here, we have a great resource with Ameritas, Kevin Baatrup. Kevin, thanks for joining us today.
Yeah, Stefan, thank you for having me. I really appreciate you guys giving me your time today. So, all right, well, I will go ahead and get started. Hopefully you guys can all hear me just fine. So looking forward to working with you guys today. I'm Kevin, your internal wholesaler over at Ameritas. So I partner with Steph and try to get you guys good products that fit your clients' needs with Ameritas. So I want to give you guys a brief history about Ameritas. We have been around since 1887. We went by the name Old Bankers Life of Nebraska all the way up until around the late 80s. We decided to make it a little bit easier for agents and go ahead and switch our name to Ameritas. A little bit less words to say than Old Bankers Life of Nebraska. Along that way, since the early 90s, we acquired Acacia, another life insurance company, and then also a little bit later in the mid 2000s, we acquired Union Central as well. So we acquired their blocks of business. So this is just a quick screenshot of the financials that we have on board for our asset management, for essentially our investment company, AIC. We have about 31 billion in assets under management as total, and we just started that fairly recently, so that's a good number for us. We had a good amount of revenue increase from 2021 to 2022 from our annual report here. And the one that we always like to say is that we have 123 billion in life insurance in force, and we can pay that claim 10 times over and still be solvent. That kind of just goes along with the mindset at Ameritas of we want to treat your clients right. So we want to be able to pay their policy benefits, however that may be, and we want to make sure we have that money on hand. So that's a stat we always love to share with our clients and agents to make sure they are comfortable with our financial standing. Going hand in hand with that, we did distribute last year 3.5 billion in policyholder benefits. So this just again speaks to the story that we just mentioned, that we have a lot of money on hand to make sure that we can pay our clients the benefits that we essentially showed them and have in the contract. So we want to make sure we pay them, and we did 3.5 billion last year. Now, looking at a mutual company, we do contribute about 1.7 million in benefits or nonprofits to 250. Most of those are localized to Lincoln area because we want to really grow Lincoln with us, as that is where our headquarters is at, but we have gone national with some of our donations as well. So really great numbers there, and really happy to be with a company that has this philanthropist standpoint. So why Ameritas? give you 4 reasons right here and go into a little bit of depth before we get into the products that you guys recently gained access to. So first off, transparent illustrations. Whether it's an IUL or a whole life, we're going to be very transparent and clear on what we're getting your clients, and we're not going to play any games. Cover that in a second. One of our strongest stories is cap rate management on our IUL. That also goes hand in hand with our dividend management. And there's a really good piece showing you guys how we view IULs and caps at Ameritas. It's a little bit different than what I would say I saw in the industry working from an IMO standpoint. Now, living benefits and technology advancements. So the technology advancements you guys are going to see very soon. That's going to come with the new contract that we have rolling out here. And the living benefits, we have some of the most living benefit triggers in the industry. We have 18 in total, which we will cover here in a slide or two. So this is the quick breakdown of why you would sell us. And going into that first point, the transparent illustration, we have a benchmarked index for our max illustrative rate. Benchmarked index essentially just means that we are not playing any games around AG49B. Recently, that was to take out some of these bonuses that companies were illustrating to make the illustration look a lot more attractive on paper. Some companies have pivoted, as we always have seen, and started using participation rates on the S&P a little bit higher than 100. So one uses 101, maybe 105%. And then they can now illustrate a little bit more because it's technically not verified as a benchmark index in the guidelines of AG49B. So something to just keep in mind there is that is how they can lift up those illustration rates because they don't have to tie it to a benchmark. Now, the big thing at Ameritas you're going to want to remember is this last bullet point here: conservative, under promise, over deliver. That is our whole mindset when we come to illustrating, because the illustration is just as good as the paper it's printed on. So it may look good on paper, but it really comes down to the company's performance, and that's where Ameritas wants to shine. We want our illustration to look good, but we don't want it to look so good that you have to go back to your client and say, well, you had a couple down years and you didn't really get to that illustrative rate, so you're a little bit lower. No one likes having that conversation. So we want to make sure at Ameritas that we're sending you back to your client with hopefully good news that they'll tell their friends and family and hopefully get you some free marketing dollars out of word of mouth, as that is a very strong marketing tool still. So I'm going to go ahead and cover this real quick. This is one of my favorite stories of Ameritas, and actually why I chose to come to this company is because we actually publish on our website our actual crediting. This isn't a historical look back of how we would have done. This is exactly what your client would have got credited on any of our sweep dates. So this is looking at our FLX IUL, S&P 1 year point to point. This product started in 2017, so we just didn't cover it on this one. So we have 2017 all the way till present day, about 3 months prior, because we have to wait for those numbers to come in. So this essentially says if I had a client that they were in a sweep date of 1/5/2019, we can see what the index started at, what the cap at the time was, or participation rate, if it's a different index. This one doesn't have a par rate, it's just 100. And then we can see what they ended at. And by the time we're at that 1 year point to point, we can see what Ameritas actually credited. So in this year, if they did that 1/5 segment, they had a pretty dang good year. They had a good return, so they got the full 12% cap. So this is something that's very strong and goes along with that transparent illustration of we want to be clear with your clients of what we're doing with our caps and how we manage the business. And this is something that you guys can find on the website, I think with 3 clicks. And I'd be happy to share that information with you after this if anyone has any questions. So moving on here, why I mention this is because we have our oldest IUL product. It has been out of sale for 6 years now. It was started in 2011 and it closed in 2018 to make way for the FLX IUL and the Growth IUL. The Growth IUL is one that you guys just got access to. So looking right now, a product that has been out of sale for 6 years now was closed. It is only 50 basis points off of the new sale. And as of this last month, this actually received a bump, which is very rare for Enforce. It actually matches the FLX IUL. It is at 9%. So while our FLX IUL, which is a new sale product, might not have the strongest cap when you compare it to others in the market, I would say it probably has a pretty strong option of staying at this cap or maybe being higher or slightly lower instead of a whole point or 2, maybe even 3 points lower, like you may see at other companies when they close a product off and make way for new sales. So that is not something we believe in at Ameritas. We want to treat clients that got policies with us 10, 15, 20 years ago. We want to treat them as close as possible to our new sale clients because they also helped us grow this business. Now getting all the numbers game, looking at living benefits, we have 18 in total. So we have 15 critical illness. The ones in blue are going to be labeled at some other companies as critical injury. We don't see it as breaking out a whole nother rider. We just said, okay, we're going to lump it in with critical illness. So there's no need for us to say, oh, these are critical injury actually. So that's why they're in blue. And then the two in green are actually unique to Ameritas. So including the benign brain tumor or coronary artery bypass, and then heart valve replacement, major heart attack, and stroke. Those are the top 5 historical payouts when it comes to critical illness. So just keep in mind, 2 of those payouts are only available at Ameritas. So that is a very strong story when you're pitching living benefits, is the more triggers you have, the more opportunity you have for your clients to use that death benefit before they are to pass away. Now, the other two going to be very similar to other companies. The chronic illness will be 2 out of 6 ADLs. We don't break out a rider for an Alzheimer's or dementia. If you cognitively cannot perform the 2 out of 6 ADLs, you are now qualified as a chronic illness and you get that payout. So just keep that in mind. And then the final one is our terminal illness. This is with any company that you may have. Just think, you have 12 months or less to live. We're going to give you the highest payout that we can. Most people think about this in 2 ways. It's taking your family out on vacations and spending that time with them before you pass, or it is financially setting up your clients to make sure that once your client does pass, that the family is taken care of. Another option that I always like to pitch, I've been hearing lately from our sales team, is this could also possibly try to extend their life. Most experimental procedures are not covered by health insurance. This is where you could possibly step in, and most companies have, even on their term riders, terminal illness. It's a great benefit that you may be able to go get an experimental procedure, and if it were to work, you raised your life expectancy, and it was because you had a life insurance policy with terminal illness. So just keep that in mind when you're selling term. I know it's not flashy, but it is very helpful to clients when you actually have to come at that time and have that claim. So just keep that in mind. So looking at the products that you guys have access to today, it's going to be on this lean approach. The FLX term cannot have a lien because there's no cash value, but we'll cover that a little bit later. Just think all the products we'll be covering today, they have the lean approach to them except for our term. It is going to be 25% for critical, 50% for chronic, 75% for terminal, and it'll be a dollar for dollar reduction at the time when you take that claim. Underwriting, I just want to cover real quick. You guys may have worked with our FLX products before. It has a little bit more lenient underwriting when it comes to a guaranteed side. So for the FLX, as you can see, you still have access to sell that. It's age 70 or younger, $300,000 of death benefit and below, and you could possibly get a preferred non-tobacco. So if you have a client that is really nervous about going to the doctor or just don't like needles, FLX would probably be the way to go. Whereas on our non-FLX side, it's going to be a little bit more strict on the guaranteed non-underwriting or non-paramed. It's going to be age 60 or younger, under 100,000, and you can only get standard non-tobacco. So that is what we have there. With all of our living benefits, as long as you get table D as in dog or better, you'll receive the full 18. If you get table E or worse, you will then have just the terminal illness. This is for all of our products. We have our non-guaranteed accelerated underwriting. So this is the one that you could possibly qualify for. For the FLX and non-FLX, it's going to be limits of 1 million for clients 18 to 60. And then clients 18 to 50, you have a 2 million max. In the future, this will be bumping up to 2.5 for that 18 to 50 range. But right now, just think 2 million flat is our possibly accelerated non-med. So before we get into all the products, I want to give you guys the full suite of what you guys will be gaining. So you will have all of these in gray. So before you had just the ones in green, which is the FLX IUL and the FLX term, both good products. But as you can see, you gain quite a bit more tools in your tool belt to sell to your clients when you add all of our whole lives, which are cash accumulation and low cost death benefit focused. And then we have an SIUL, which is something you guys didn't have access to before. We have an IUL for growth, an IUL for death benefit, and then we have a term that isn't as costly to your client because it is just straight mortgage protection typically. So you pay for a death benefit, that's what you get. And if you get a terminal illness, we also pay out, but it doesn't have any other living benefits such as chronic or critical. So you're gonna gain quite a bit of products right here. So looking first at our Ameritas term, this is going to be our basic one that we have. It is the Ameritas Value Plus term. I do want to say right now, if you ever hear the word Value Plus when it comes to products at Ameritas, just think it is the cheapest method to get your client that specific coverage. So we have a Value Plus term, a Value Plus IUL, a Value Plus UL, a Value Plus Whole Life, and a Value Plus SIUL. Those are all going to get you the death benefit at the cheapest cost point that we can for that product. So that's just a helpful thing to remember. Nothing too fancy here. I will say the conversion is going to be nice. I'll cover that next slide. One thing I do want to mention to you guys is that we do offer a discount to clients. It is in the form of the same payer discount. That is going to be a reduction in policy fees of 50% on each policy listed. So I have never seen a max to this policy. The most I've seen in Ameritas while I've worked here is 15 policies on this, which generated quite a bit of savings for those clients. The only thing you need to actually get this discount is you have to have 2 or more policies paying from one bank account. Simple as that. So if I were to get one on myself and I had a spouse and they wanted to get a policy as well, we pay it from the spouse's bank account or my bank account. As long as it's coming from one, we would get 50% off on our policy fees. Now, typically that only saves roughly $5 to $12 a month. But if we both have 30-year terms, that's going to be hundreds of dollars in savings, if not thousands, just by me clicking a button and paying from one bank account. So something to keep in mind. And as you can imagine, if it saved hundreds of thousands on a couple of clients, that policy with 15 of these saved quite a bit of money just by putting them all together and making it easy for Ameritas to just pay all those from one account. That is why we give that discount out, because you're saving Ameritas time by trying to process different bank accounts. So we kick that savings right back to you and the client. Now, this is going to be our easiest option for quoting. It is going to be simply you go to Producer Workbench and there's a section called Calculators. You click that and then get a term quote, and then you just put in basic client information. So this is going to be the easiest way to run quotes is on this Value Plus term. Everything else goes through our full website, which takes a couple extra clicks and a little bit of know-how of how to work. Now, looking at the conversion options, this does have conversion credits. So in the first 5 years, just think you're probably going to have some kind of credit rollover. And when you have a base conversion of the first 5 years of the policy, which is very nice. And then we do offer a conversion extension rider at a little bit of a cost. You can get your client a conversion all the way up till age 70. So just something to keep in mind there when you're selling these, that base conversion of the first 5 years is very nice. Before I move on, I wanted to see, is there any questions on the term before I move on? Perfect. I'm not seeing anything in here, so I'm going to go ahead and move forward then to our IUL. So the IUL you guys will be gaining access to is going to be the Growth IUL 2. Now, if you're selling in New York, you'll still have the Growth IUL 1. Every other state, the Growth IUL 2 is approved. And these are some of the features of that IUL. It's going to have death benefit and living protection, just as we have on most of our products. It'll have 8 indexes in total, 3 of those being volatility controlled indexes, 1 being proprietary to Ameritas called the BNP, and the other 2 being the S&P sector rotator, which we'll cover a little bit later, and then the S&P Mark V. So if you've worked with annuities before, you probably recognize at least the Mark V, possibly the sector rotator. And then we have 2 riders that are really, or 2 options that are really nice. One being the lean approach. That's just how we pay our death benefit out with living benefits. So we'll see that how we accelerate out of Ameritas and how it may be a little bit more beneficial compared to your typical discount approach on a permanent product basis. And then we also have the lifetime income rider. This is one that I'm really proud of at Ameritas, and I think Steph would probably agree here. It's very important for our generation to have this rider on our products, and people similar in that age range to kind of have this rider. And I'll explain that a little bit later on why. And then we want to give you just a loyalty bonus. Think about it that way. If your client sticks with us for 10 years plus, so on the 11th year, they would get this guaranteed 5 basis points. So you don't have a 0 floor anymore. It's not a huge floor of 5 basis points, but you can increase that if we do get an Emeritus, which typically we do. We've not missed a dividend. So I would imagine on our IUL, as long as it's not cost effective, you can also get up to 15 basis points total as your now new 0 floor. So moving forward to our lien approach, this is going to be how we pay out, and it's all going to be based on the initial face value for IUL. On whole life, it's a little bit different, and I'll explain that later. But we're just going to talk in easy terms here on the initial face. So for this client, we can see female, 35, standard non-tobacco. We are funding $300 per month to hit target, and the client has a health crisis at age 60. So we can see their initial face value was 404, and this is our pool of money for whatever illness we may have. So terminal, 75%, we get this money. As you can see, it will say guaranteed lump sum amount. That is because we are basing it off of the initial face value. So you can understand your client knows for a fact this is what they're going to get. With a discount approach, you don't know what you're going to get because it's all dependent on how severe the illness was and then how long the client has to live afterwards. So this just gives your client that extra security in their mind saying, okay, I know I have this much money to pull from if I ever have a critical, chronic, or terminal illness. So just think about it that way. So moving forward here, health crisis at 60, they say, okay, I want to take my 25% critical illness out. What's going to happen is we see on this left, this is before we take the offer. They take the guaranteed offer of 101. That is going to reduce the cash value. That's the lien portion. And then it accelerates the death benefit. Now, this is different from a discount approach because if I were to have a discount approach, this account value would also drop down by whatever was taken out. So you can see I would actually be sitting at the same exact cash value right here in my account value. And why that's important on an IUL that we leave it untouched on our lien method is because that account value is what's earning you uninterrupted compounding interest. So that is what you're tied to in an index. So if you're putting money into the S&P, the account value is what's earning that money. The cash value is what you can borrow from if you ever wanted to take a loan. So right now, your client would be affected because they can't take as much loan, but they did get $101,000 to pay for that critical illness. What happens if we just let the policy ride? We never pay that lien back because think of a lien as a loan against your cash value. What if we never pay that lien back? Well, 10 years down the line, we're looking at a lien value, loan value, same thing, kind of equated to that, of 2.5%. So we can see by the time that they're age 70, 10 years down the line, the lien balance, instead of being 101 with that value of 2.5, it's now at 140, which means our death benefit went down still. So we're at 260. But here's the good thing. Most clients are getting IULs, not all, but most are getting it to use cash value or have tax-free income. With our lien approach, we didn't pay another premium into this. Our account value raised because we left it alone from 142 to 244. And then that subsequently raised our cash value. And now we have, instead of $40,000 to loan from, we have 103. And that's because we left the account value untouched and that account value started earning more money back. So that is the power of using a lien approach compared to a discount, is that if we had this discount approach, more than likely the policy would have lapsed. And if it didn't, it definitely would not have gotten back to this within 10 years. It would have took a little bit longer, or it would have required a repayment. So that's the kind of difference to think of when you're getting a permanent product. You want to make sure that you're at least taking a look at lien options as well. So moving forward here, something that's very nice for the agents that work with Ameritas and then also staff members like Stefan at IMOs, we offer a 4% discount on the premiums for employees. You are employees with us. The good thing about that as well is that we actually extend that out to your immediate family members. So think your spouse and your children, they're pretty much guaranteed to get this employee discount. Now, I always say never hurts to try with extended family members. I know a couple people at Ameritas that have son-in-law or daughter-in-laws on this discount. So I say it never hurts to ask, but we know for a fact that you yourself qualify, your spouse and your children qualify for this as well. And it does have a 20% commission reduction, which sounds like a lot. But I will say I had a agent that I worked with. She was 35 when she got her policy. And essentially, she took a look at, she issued it without employee discount. She wanted to look at what it would be if she did start it with employee discount. She would have lost, I believe, $4K in target commission, which isn't a small amount, don't get me wrong. But by the time that she hit retirement, she had an extra $125,000 in her account value and cash surrender that she could take from. So I would say fair trade-off at the end of the day. Just depends on how long away you are from retirement and when you're going to access your money, on when you would want to put this on. I'm going to cover these very briefly. Looking at the BNP, is a volatility controlled index. So essentially just understand that you're taking whatever you're earning in whatever index this is, multiplying it by the participation rate, and it's uncapped. Simple as that. So if I were to take my 207 return, times it by 5, my 5% return by the par rate, on the growth, I would get 10.35 instead of a 5% flat if I was just in the S&P. Simple as that. This is the components that make up the BNP. It cycles 14 of these down to 8, and then out of that 8, it's looking for the highest weights and lower volatility components. Simple as that. And this is done on the back end, doesn't cost your clients anything. This is just an agreement Ameritas has with them. So no worries there. Just think you're trying to hit a home run with this index. And that's what all these indexes really are going to be. So the sector rotator is going to be 11 sectors of the S&P. It's looking for the first 5, so the top 5 with the best valuations. And then from that top 5, it's looking, okay, from a price momentum standpoint, what are the top 3? And then from that point, it selects the top 3 and sets that in for 6 months. And then rinse repeat after the 6-month period. It just keeps looking and going for the best ones that we can get in the S&P. And again, this is just, you take your return, multiply by the par rate. This is accurate, it's current. So it's 186 and you get that 9.3. I know I forgot to change this to 18, but I did multiply it by 186 and it did come out here that way. And then looking real quick at the Mark V, there's a whole description of what the Mark V is and what makes it up on the tracking sites when it comes to indices. So I recommend going there, but I'll just let you know, we have a par rate of 194. Again, it's just a little bit higher than that sector rotator and has done a little bit better than the sector rotator has done in the past. So this might be a good option as well to diversify some money into that. Now, moving on with our IUL, we have a premium deposit account at Ameritas. So currently that sits at 3.5% interest. This is for your clients that have a lump sum of money. They want to write a check one time to a company, get a life insurance policy, and they don't want to have to worry about it anymore. Now, obviously, they might get cash value down the line, but they don't want to write any more checks or worry about having money in their bank account to make their premium payment. So what they can do with Ameritas is put that into a PDA. So looking here at 100,000 at 3.5, we're looking paying it over 10 years. The longer you spread out the years to pay, the more interest you're going to get from Ameritas. So just taking a quick look, your client would have paid $100,000 total into this policy if they did the same 10 pay, just self-funding it. With the PDA, they actually get 116 put in their policy, 16 of that coming from Ameritas. So our actuaries and people here hate us pitching this in sales because it is not cost effective for us, but it is a great benefit for your clients to have. So we will keep pitching it because your clients get $16,000 free into their account by having it here. So that's something that is very nice for your clients. This is also something you can pull from if you need any money. So let's say you pay that first year. We're going to take 10,000 out. I'm going to make these numbers easy for me. So we put in 100,000. The first premium was 10,000 taken out, and then we have 90,000 left. Let's say I had a 0 year in my IUL and I don't have any money to loan from, but I just saw this investment property and I want to take out 50,000 for a down payment. Okay, I can take that money out of the PDA. The only thing that happens is once I take that 50,000 out, in my hypothetical, there's about 40,000 left. Instead of being interested at 3.5, it is now interested at 3 flat. It's a 50 basis point reduction in the interest that you earn when you take money out, but it is flexible and you can take the money out. So that is a nice feature as well. Now, moving on to the lifetime income rider. This is another rider that is free to your client, included on all of our IUL policies, and it's just a very nice option to have. It gives the flexibility. So what you need to activate this rider is going to be having the policy for 10 years. You have to be between the ages of 50 and 85. And the only time it costs your clients is if they choose to activate it, and at which point in time we take a 10% one-time fee of the account value at activation. So if you have 100,000, we're going to take 10%, 10,000, you're going to have 90 left, and that's going to determine what your payout is. We have these three sliding scales, which you'll just see in this next slide I want to show you. Looking at a male 45 with a policy paying $250 a month for 20 years. If we're looking here, they paid $60,000 into their policy over their lifetime, and they're not going to pay anymore. If they were to activate at age 65, they'd have about $440 a month, so not a crazy amount. But by the time that they're at age 85, they've almost doubled what they put into the policy on a guaranteed form of income. And if they live to age 100, they've now tripled it. So just keep in mind, this is a guaranteed form of income that the client doesn't turn off. It stays with them until the day they pass away. On these increasing and potentially increasing, as you can see, the longer your client lives, the more attractive it typically looks. The only difference between an increasing and a potentially increasing is that the potentially increasing is partially tied to the S&P, so it has a little bit more upside. Now, let's say your client doesn't activate at 65. They actually say, okay, I want to wait till 75. I have other investments that hold me over until I get to that point. So at the same 10-year duration, going from 75 to 85, the client doubled their money. And they're going to earn well above that because they're just taking out more money, being $1,000 instead of $450. So why this is important to my generation, I always like to say, is one of two things is going to happen to Social Security. One, it's not going to be there at all, which I don't find to be true. The more likely reason is that it's going to be a lot less money than what I am planning for right now in retirement. So how are people in my generation, maybe a little bit older, younger, how are they going to plan for retirement effectively with the assets that they have on hand? The LIR is a great option because I never have to use it. If I don't use it, I now have money that I can pull from in the form of a loan to go buy a boat, a house, whatever it is. Or if I don't want to do that, I have living benefits if I get a chronic, critical, or terminal illness that now pays that out. And if I don't use any of that, the day I pass away, it passes to my beneficiaries. So it's a multi-pronged tool here with life insurance with lifetime income rider that I now have multiple different channels of how I can take my money out or how I can be paid if something were to happen to me. So it's a very, very strong piece here for kids my age. So looking here, I want to start with the whole lives that you guys have access to. So we have 3 in name. The Value Plus, as I mentioned before, you're going to get dividends on this, but it's not going to look very good when it comes to a cash value standpoint. It is really focused on getting your clients that guaranteed for life death benefit at a little bit higher ticket price because it is a whole life compared to like a GUL or a PIUL. So I just want to let you guys know that is the one that's going to be the lowest cost for the death benefit. And then the Access Whole Life and Growth Whole Life are very good options for when you want to take money out of your policy or you want to see cash growth. It just depends on when you're taking the money out. What product you'll use, which we'll see in these next couple of slides. Now, as I mentioned, this also has the same payer discount. So at Ameritas, our whole lives and our terms are the ones that get the same payer discount. The IULs are not available to be having that 50% off policies. Now, that does not mean if I have an IUL and then I get a term or a whole life, I can put that I'm getting a same payer discount. The discount's only going to apply to the whole life or the term policy, though. So it doesn't mean that the IUL is disqualified. It just doesn't get the policy discount itself. So good news, we went to 5%. We actually increased our dividend. We have never missed a dividend in the Ameritas history. We've paid it ever since we've existed. So very good start point. We were at 4.6 and then we went to 5. So this next slide, it's just showing you how the Access performs at 4.6 compared to 5. As you guys all know, the more dividend you have, the more illustration value and more return you're going to get. So just taking a look, here's how much more cash you would have if you got that 5 dividend. And then you can see what the death benefit would be in comparison as well. Not shocking anyone here that a higher dividend yields higher rates in returns. So looking at the Access Whole Life, this is going to be a guaranteed contract rate of 3%. And this is going to be the big one for debt elimination that we've seen a lot coming back, and then also be your own banker or infinite banking because you can use it and it looks very good in the first 15 years. That's because we geared up the dividends to be a little bit higher on this one than the Growth Whole Life. So in the first 15 years, I would say if you're going to use your policy, the Access Whole Life is going to be the best fit for you. Now, on all of our whole life policies, you can access the cash value as early as 31 days into the policy. That just shows us that we got essentially a payment from you and we can start taking money out. Simple as that. Now, I'm going to go ahead and cover the FPUR rider. This is a very nice rider. I'm going to make these numbers easy for me. I'm going to say the client is paying $2,000 a month total. 1,000 is going to base, 1,000 is going to FPUR. So on the FPUR portion of money, after year 1, that money is very flexible. I like to call the FPUR kind of like our IUL portion of money because it is a very flexible premium. So if you remember right, I had 1,000 going to base, that has to be paid. I cannot not pay my base on a whole life. But on that $1,000 FPUR after year 1, because year 1 sets the midpoint. So the midpoint that we have after year 1 is $1,000 going to the FPUR. I can either pay 50% of that in any given year if I don't want to fund it as much, or I can pay double that if I want to overfund my policy without any additional underwriting. I can pay $2,000 a month in that FPUR. Or let's say, okay, I don't want to make 4 payments in a row. So whatever mode you are working with, you can do that. So let's make it easy here. The monthly mode, I can skip 4 months in a row of this premium. Now where you see this gets powerful, if I'm doing an annual mode, I can skip 4 years of this premium and then make that 5th payment to make sure that it keeps on the policy. If you skip 5 payments, it is going to take this rider off, and then you can only pay the base. So that can be a little confusing sometimes, but just think FPUR is your midpoint, and the first year sets the tone. So if I illustrate at $1,000 of premium of base and $1,000 of FPUR, but I only pay $500 in the first year of FPUR, that means that is now my midpoint instead of $1,000. So now I can pay 50% of that or double that. So that's why I would say after the first year, it's a very flexible option for your clients on a whole life, which isn't very common. Spreadsheeting, not going to stay on this too long. Every company has these, so I will move forward. And then this is the exact same policy, contract rate and everything. It just looks better in the years 16 plus. So this is better for your juvenile cases or clients that aren't going to touch this money for at least 16 years. Now they're spreadsheeting. Here is what I really want to show you guys though. So on the left-hand side, we have the Access Whole Life, and on the right-hand side, we have the Growth Whole Life. So besides this first year, we can see that in the first 15 years, the Access just has more. So if we're looking at year 11, we have 102,000 in our cash value on the Access Whole Life, where we have 99,000 on the Growth. But where we can see that turnover point is right around that year 17. We see that at year 17 for the Access, we're at 167. At the Growth, we're at 169. And once we get down, the further you go down, the more you're going to see an effective change on the Access to Growth. So year 20, 191 on the Growth Whole Life. We're seeing at year 20, almost 200,000. So it just depends on when your clients are taking out money, what product they're going to use. Both are very solid options. As you can see, they stay pretty close to each other in the first 20 years, but the Growth is really going to start winning after that year 20. I can almost guarantee it's going to go up a lot higher. Now, the good thing about Ameritas is that we are not a direct recognition carrier or a non-direct. We give you the option here. So we have direct recognition loans on our fixed ones. So that just think about it's interrupting your compounding interest because the dividends are impacted. So most times we don't see people use fixed loans. The only reason someone would is because they have a nice low interest rate of 4%. And with our dividend rate at 5%, you can see you're going to beat that. So that's the good thing. Now, the thing that we want to keep in mind, though, is that your dividends are going to be affected. So it's going to be a 1% instead of a 5% because you're negating that fixed loan. Now, with a variable loan, it is a non-direct recognition. So that means your dividends are not impacted. So you're going to have that uninterrupted compounding interest, but it comes at a ticket price of being a little bit higher on the illustration rate, or the, sorry, not the illustration rate, the interest rate on that loan. Currently 6 right now. This is a little bit old. It's 5.5, and that can go all the way up to 8. Realistically, you're not going to see that. You're going to see it somewhere in between 4.5 and maybe 6.5. Now, the good thing about Ameritas is that when you take a variable loan, you do this form UN 1646, and if you don't take a loan over 25,000, you can call that in to our team. So you don't have to do this form again. The only time you do is if you are requesting anything over 25,000. So as long as you stay below this number, you can just call that into our policyholder service team and say, hey, we want to take a loan for $20,000. Easy peasy, no form needed. After we get this first form, of course. So moving forward here, I want to talk on our Value Plus suite a little bit. So looking at our Value Plus IUL, this is going to be a great option for clients that want whole life benefits, but don't want to pay whole life sticker price. So this is going to be a great option. It gets a guarantee to age 90 or year 50, whichever is attained first. So for me, I'm 27. I'm at least going to get a guarantee to age 77. That's good for me because I know a guarantee is really the worst case scenario, and I'm not relying on the S&P to be zero for 50 years in a row. I think I'd have a little bit more concerns than my life insurance policy if that was the case. But it's nice to know that my policy does have a guarantee that they're going to pay me even if that happens. Now, looking at this policy, we do have a 3% look back. So if I don't earn 3% at the end of my 10 years, we're going to true up at Ameritas and give you 3. So that's also a very, very nice feature. Now, one that I love to use for this on any of these products is the lifetime income rider. So typically clients are not getting this for lifetime income. They're getting it to pass a death benefit on to their heirs or their beneficiaries. So most times it's not going to be important, but what's to say that needs down the line change and they actually don't need that death benefit from this policy, it's coming from somewhere else. Now, typically, let's say they're stuck in this policy and they're too old to get another one. Well, with Ameritas having the lifetime income rider, it may not be a lot of money, but it's better than them having a death benefit that wasn't going to be used anyways. So it's actually kind of nice for your client to have that. And then also the living benefits as well. If they were to pass, if they were to have something come up, they still have that as well. So great option for most clients to use if they want death benefit protection, but don't want to pay whole life pricing. And then this is going to be almost the same policy. It's just going to have less guarantee and it isn't tied to the index. So this is just going to be kind of like a whole life without all the juice or guarantee. So you're trusting Ameritas returns and how they're doing as a company. It has the 3% look back at year 10. I believe the current scale is 3.6 for the illustrated rate. So it's still pretty low, pretty close to the guarantee look back. So the good thing about this, a lot of people use this for a term alternative because it guarantees for 15 years. And I actually just had one with IMS. I was working with Paul and the client actually saved quite a bit of money. I think they were paying, I want to say roughly $900 for one of our whole lives. And then we showed him a UL and I want to say it was around $600. I could be misquoting those numbers, but I know it was a $300 difference just by getting this policy and us letting it lapse after year 15 because we're still getting a guarantee, essentially a term of 15 years, and we're saving the clients some money. So really great option, and this is going to be almost always our cheapest product when it comes to just getting a death benefit. Now for the final one here is the Value Plus SIUL. This is going to be our product that is going to be very popular in this next coming year. If you guys are aware, the Tax Jobs Cut Act is due to expire. So estates are likely going to be exposed a little bit more than they are currently to estate tax. So we want to make sure that we're getting clients taken care of. This is going to be a great product to do so. This passes at the event where both people pass away. The death benefit passes to the beneficiary. Now, the good thing about this as well is that we can have an uninsurable. So this is going to be a great option for your clients if you have one uninsurable and you want to try to get the cheapest coverage or get that client insured at all. This is a great way to do it. So great product here. Now, moving on to the process, I'm going to cover this super quickly. Just taking a look. This is going to be essentially the Bible for Ameritas, non-FLX. It's going to have all the contacts that you need to get in with Ameritas, whether that's underwriting, new business. They will help you all along, and it's all found in this guide. It has competitive advantages, so some of those things I showed you earlier. Underwriting shows you how to do illustrations, shows you how to use our portal. So just think of this as the one-stop shop to learn about Ameritas products that are not FLX. If you guys haven't registered with Producer Workbench, just go to producerworkbench.com or service.ameritas.com. Click register on this right-hand corner, and you select financial professional and third-party administrators for retirement plans. And then you just answer all the personal information that you have about yourself. Simple as that, and you create your login. Once you're in there, I highly recommend using Prepare for a Sale. This is where you can find any information on our products. And in that Universal Life tab, that is actually where you can find all those historical creditings as well. So very nice for your clients. And then if you have any need for physical brochures, you can order 25 of those from Product Portfolio, Sales and Marketing Material, and then click Get Sales and Marketing Material. Anything that says request materials, you can order 25 of those items for free. And that's not just a one-time use. So if I order 25 of these Portuguese brochures this week, and then I order 25, the next week, I can do that over and over again. It's just 25 is the limit. So simple as that. Now this is one that's very nice for the non-FLX side. We have a mobile app that actually allows you to track your business. So very nice. you can go to any app store that you have and then click Ameritas Agent, and you log in. Once you've registered with the producer workbench, you log in with the same information. And then once you're in, it allows you to track pending, issued, and not placed cases, and you can see exactly where all of your business is. So very nice. And you can also even see, requirements that are out there and what maybe you need to do, or when it was ordered, when it was taken. So there's a lot of great information in this website or this app, and it's only getting better and better every single day. We actually had an update last week that there's a lot more information now and notifications for policy review at the annual point. So something to keep in mind there. And then this is going to be how it kind of looks in the notification center. So just wanted to show you guys all of this information and move on here. So again, I'm your internal wholesaler. Here's my contact information, Kevin Baatrup at Ameritas.com. And then if you need to, you can always feel free to give me a call, 402-325-4077. And that's my direct phone number. If I don't answer, please feel free to just go ahead and leave a voicemail, because usually I'm on these trainings or doing phone calls. So if you leave me a voicemail, I get back the same day. Or you can talk to Stefan and he knows how to get a hold of me as well. I just want to say thank you for hopping on this meeting. If you need anything, this 800 number is going to be the number that you can call if you need, and that gets you to a group of 5 different members at Ameritas. And then any requests that you may have for illustrations, that idc.sales@ameritas.com is a great resource as well. Perfect. All right, well, Steph, I will pass it along to you.
Thank you, sir. Thanks, Kevin. Thanks for all the information. I do have one last poll question. Go ahead and get that launched. It's, would you like more information or contracting for Ameritas? Do want to thank you all for joining us. Kevin, thanks for joining us as well, giving us all that information. Feel free to reach out to one of our sales reps if there's anything we can do for you before we reach out to you. 800-255-5055. Thank you all for joining.